Hi guys, it's Stock Curry, and after Friday's massive market crash, what can we expect for this week? Well, probably more of the same early on, but perhaps a little bit of a rally at the end of the week. I'll explain why in today's video, so let's get into it! To understand what might happen this week, we have to understand why the market crashed on Friday. Jerome Powell spoke at Jackson Hole Friday morning, and it was a very short 8-minute speech. During that 8-minute speech, there was one thing Jerome Powell said that the markets freaked out about, and that was quite simply, Jerome Powell said that inflation remains higher than he would like to see, and that the Federal Reserve will continue to raise interest rates and will continue to keep interest rates elevated until inflation comes down. Now that scared the markets because the markets were on high, hoping that the Fed was going to stop raising interest rates and just let the interest rate hikes that they had so far work their way through the economy. And Jerome Powell shattered those dreams and brought everybody back to reality, which sent the stock market down 3% in the S&P and down, and 4% in the NASDAQ. So given the scare and the fear that is back into the markets, what is going to happen this week? Well, let's take a look at some of the economic news, because this week is going to be driven off of a lot of economic news that's coming out. Before we get to the economic news, let's talk about the fundamentals that are driving the stock market right now, which ultimately is going to be earnings. Unfortunately, the rent crisis on Main Street just took a turn for the worse as businesses are having difficulty paying their rents. Alignable did a survey, and the Alignable data shows that many small businesses are still struggling to get back to pre-COVID revenue levels. And this is happening just as the Fed is taking steps to slow down demand. Last December, amid the critical holiday season, 43% of small businesses said they were fully back to pre-COVID levels. However, now it's only 23% of businesses that say they're back to pre-COVID levels. And it's not just Alignable. The Alignable data actually matches a recent CNBC SurveyMonkey small business survey that was done, which showed small business confidence hitting an all-time low. And it's not just small businesses that are struggling either. Inventory pileups and uneasy shoppers are putting major retailers in jeopardy. These major retail chains have a huge amount of inventory and unsold goods going into a big sales period just as consumers are cutting back on their spending. And all of this bad news has caused investors to ramp up their bets against the stock market as this summer rebound rally fizzles. Net short positions against the S&P 500 futures have grown to levels not seen since the COVID pandemic. The S&P 500 is coming off of a second consecutive week of losses after the Federal Reserve Chairman Jerome Powell said Friday that the central bank must continue raising interest rates and will hold them at a higher level until policymakers are confident that inflation is under control. The stock market suffered its worst day in more than 2 months on Friday. Now, part of the reason the stock market had rallied is because inflation moderated a little bit in July, but Jerome Powell said that those price ratings were welcome but fell far short of what the Fed is looking for. So Jerome Powell coming out and saying even a 0% month-over-month inflation report is far short of what the Fed is looking for indicates that the Federal Reserve will be extremely hawkish going throughout the rest of the year and into 2023, trying to get inflation under control. This certainly spooked the stock market, caused the stock market to crash on Friday, will more than likely cause the stock market to continue to fall on Monday. However, going into Tuesday, Wednesday, Thursday, and Friday for the rest of this week, we have some very important economic data that's coming out that could possibly provide a little bit of relief to this massive sell-off that we've seen over the past few days. This week, we have job market and home price data, including labor data from July and August. On Tuesday, the Labor Department releases its July data on job openings, quitting, hiring, and layoffs. This data is a lot more in-depth and finalized than the preliminary data for August that we're going to get later in the week. The S&P Case-Shiller National Home Price Index is also being released on Tuesday. We already know what price trends have been in June, and on Tuesday we're going to get some information for July. The Conference Board's Consumer Confidence Index is also being released for August on Tuesday, and this is expected to have risen slightly after hitting its worst level ever back in June. Consumer confidence is expected to have risen due to lower gas and energy prices. However, some people think the rise may be short-lived as gas and energy prices start to rise again. On Wednesday, we get the European Union's CPI, or Consumer Price Inflation data, which is expected to have remained at 8.9% in August, although this won't really affect the stock market that much on Wednesday, but it will provide a little bit of pause on economic data on Wednesday. Now on Thursday, we get a couple of different reports from the Labor Department. The first one that we're going to get are for new filings for unemployment ending for last week. And then we are also getting a revised estimate of U.S. labor productivity, which is essentially a measure of goods and services produced per hour worked. And this is expected to have declined for the second straight quarter. This kind of goes into GDP a little bit. On Thursday, we also get the Purchasing Manager Survey, which is a major survey that has moved the market significantly in the past. So when S&P Global releases this survey on Thursday, we can expect a pretty big market move just based upon this one survey alone. And also on Thursday, we have construction spending, which is expected to have held steady. And finally, on Friday, the Labor Department will report how many jobs the U.S. economy added in August, and they'll say whether the unemployment rate held at the 50-year low reached in July. The August employment report will also include updated figures on wage gains, which is very important to look at to see if we are in fact entering a wage growth spiral. And if we are entering a wage growth spiral, that could cause concern that the Fed might raise interest rates even more than they did at their last meeting. The reason for that is because a wage growth spiral will have a more significant negative effect on the economy than normal inflation, because a wage growth spiral can actually trigger hyperinflation. So if we are getting signs of a wage growth spiral, the Fed is going to have to raise interest rates very quickly to get that under control before it gets out of control and completely destroys the U.S. economy. So that's all the economic news that we have for this week. In the beginning of the week, I think the market is still going to be focused on the Fed's comments from Friday and might drop a little bit. Later in the week, especially on Tuesday, Thursday, and Friday, we have some pretty big economic data that, if it comes in positive, could push the market up a little bit and provide a little bit of a relief to this sheer drop-off that we've seen starting on Friday. Now, that said, we also have some earnings coming out this week. Even though earnings season is wrapping up, we still have a few companies you might want to keep your eye out for. The only major earnings we have that people are really going to be interested in are coming out on Tuesday, and that includes Best Buy and Baidu before the market open, and then after the close on Tuesday, we have CrowdStrike, ChargePoint, and Chewy. So that's going to do it for all of the market update. I also wanted to let you know that you only have 2 days left to get up to 25 free stocks and to join the VIP Discord. On Friday, I closed put options on Apple for 132% profit, Amazon for a 126% profit, and Roku for a 109% profit. If you want to potentially make profits like this in your portfolio, then come join us in the VIP Discord. You only have 2 days left to sign up, and then I am closing the Discord to new signups. In just 3 days, the Discord will be closed to new signups, and from that point onward, you will have to apply to get in. We want to make sure that we're getting the right people in the Discord that really want to learn, so we are going to switch to an application process, and we are also significantly increasing the prices next month, So you only have 2 days left to sign up for the Discord at the current rate of just $25 a month and to lock in your spot in the VIP Discord. If you're interested in that and you want to potentially make 132% profit in your portfolio, you can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. I also wanted to let you know that you only have 2 days left to sign up for Moomoo and Webull and get up to 25 free stocks. Moomoo is offering up to 13 free stocks when you open and fund your account with at least $2,000 and 10 free stocks when you open and fund your account with at least $100. Webull is offering up to 12 free stocks when you open your account and fund it with at least $100. Combined, you can get up to 25 free stocks. If you're interested in getting Moomoo, you have to open that account, get it funded before the end of this month. So you only have 2 days left to open your account and fund it. You can sign up for Moomoo at stockcurry.vip/Moomoo. That's stockcurry.vip/Moomoo. And if you're interested in Webull getting anywhere from 6 to 12 free stocks, up to 12, it's a lottery system, you can sign up for Webull and fund your account before the end of this month at stockcurry.vip/Webull. That's stockcurry.vip/Webull. Alright, I hope you enjoyed this video and got a lot out of it. Don't forget to hit the like button and subscribe. And if you're on YouTube, click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.